I had a little bit of red in the morning. I was trying to play bounce on QQQ calls and then got caught. I cut it, and then I was away from my desk when the real move came. So a little bit of red for the day.
Okay.
So something just to consider when there's a gap up in the market.
Yeah.
Just think about the psychology of a person. You wake up and you see that your account is suddenly up $10 a share or $10 per. What's the first thing you're going to do?
Take the money out.
There you go.
Profit.
You're a
Exactly.
trader. You're going to take the money. So
Yeah.
that's why for something like a Tesla today, which was gapping up,
Yeah.
I saw the gap up on Tesla and knew that people would be taking profits.
Mm-hmm.
And so
I mean, I did jump on the calls right off the bat. It was later, and I think we were about to fill the gap on QQQ, but we're not like completely there on SPY. So I think that's where I got caught. I was break even almost at one point when it was trying to retrace to the VWAP, but I was greedy.
If you don't mind me asking, are you playing 0 DTE, 1 DTE, 2 DTE? What are you looking at?
I usually do 1 DTE.
Okay. Just consider if you want to change that to 2, or if you want to play 1 DTE, maybe go a little bit deeper in the money. Data burns you.
Right. Do you guys do futures as well, or no?
I used to. You can play futures. It's really well. I mean, it's a good thing to play if you want to. The tax implications are better. I don't know where you live.
I'm up in Canada. I don't think they're very different, but I have not explored that yet. But I've heard that there's no theta decay in futures and whatnot. I've personally not experienced even a single bit of it, but I wanted your take. Since many people that I've talked to, everyone has said yes, they're better, but some have said they burn you bad. I mean, it's risky. I don't know why people say it's risky.
Because you can lose more than your initial investment. In an option, if I buy a contract, I can only lose whatever I risk. In a futures contract, I can lose more than my initial investment.
All right. So that's why they said you always enter with a stop.
You always, especially, I mean, Frick teaches, and it's a good thing that you should have stop loss in every option play that you're taking, but especially in futures, you must have a stop loss in future contract, because if God forbid something happens in the market, it drops, you could owe quite a bit of money. So you have to be. That's the first thing you do as soon as you start an option or a futures contract. You set a stop loss. I would recommend if you're interested in that. You don't do much futures, do you? I don't think.
No, I've never done it. I know. I mean, I understand the basics and everything else, but it's another set of tools to learn. And like you say, you can lose.
It's another set of tools.
Yeah, you can lose way more. And the thing is, not every day is a day for SPY. So many times there's good moves on Nvidia and these other tickers, and
exactly.
So then you're going to miss out. And I'd like to focus, because the more indicators you have, the more different things you trade, the more tickers you trade. It's just like you don't get better at everything. You you get worse at everything. So I like to specialize and focus. At some point, I may do futures, but like you say, there's the risk of, because every trade is leveraged. Like Vic says, if you buy an option, that's all you can lose. Now, if you sell options, you can lose way more. But I mean, that's not the game we play. Where with futures, every trade you take is leveraged. It's like, you pay so much, but you have a margin of 10 times that. So if it dips quickly, you can lose more than what's in your account.
I mean, this is a great place to learn about options. If you're interested in learning about futures, go talk to Breaking Chad. They're running more of a futures setup over there.
Right.
Like I said, it's always good to learn. You can go learn over there. I'm sure, Neil and Chad, they're fantastic teachers when it comes to futures. It's just another tool to learn. But,
right.
If you're trying to master this right now, just focus on what, you kind of want to focus on one thing. I mean, people focus on just SPX, SPY, and QQQ, and they do quite well for themselves.
That's
You
what I
don't
want
have.
to do. I want to focus right here, right now. Focus on options because the learning curve, futures hasn't even started for me. So I'm hoping to just master this right now.
I
Yeah, I
mean,
mean,
Frick and I say it all the time. Frick created a really nice tool here. It kind of gives you some very good entries and exits. And I say it to him all the time. We talk about it. If we just follow the indicator, we
Right.
filthy rich at this moment in time. But I don't know why you don't follow. Just follow it, Frick.
Yeah, and that's what I think I messaged you, Rick, I think in one of the channels yesterday, and I want to know, even though, like, so I had a little bit of red QQQ trade in the morning, and that's it for me. I did not take any of the trade. But the winning trades that you guys had, would you mind sharing the entries and the exits? So that way, I mean, I got your exit screenshot on that rejection candle when I think you were in a put, SPX put trade, and you put a little screenshot on that blue cross rejection candle that you had your exit, but I'm not sure. I missed where your entry was.
I mean, it's really hard to do that because when I'm not. My problem is when I take a trade, I'm trying to focus on the trade, and then
Yeah, after the fact. I'm not saying like you share while trading.
yeah.
After, like once you're done and once you're out, maybe a little circle or a mark that this candle was my entry candle.
Okay,
That's
no,
it.
I could do that. I mean, the problem with I'm using Thinkorswim, and the thing is, once you're out of a trade, that it forgets everything you did. So, but I mean, so
I see.
I can roughly remember. I wish it worked better so that you can, like, you have to take screenshots while you're
I
trading to
see.
get anything
Yeah.
accurate. But so after
Frick,
the
I could. Frick, you can. I can. There's a place on Thinkorswim where you can see your orders, your filled orders, where it can tell you
yes, but I
where
mean,
you
it still
got in.
doesn't give you percentages. I mean, so it
Oh
gives
no,
you.
you have to figure out your own percent.
That's right. I mean, it gives you some of that stuff. So you
Yeah.
could, but it's just like so painful.
Yeah.
Yeah, they
And what's worse
I
is
just
if you buy, like, if you buy multiple times and then you sell, um, it just moves your break even price, and it's totally unrealistic. So if you then sell at the rest of it at what you think is your break even price, then you're actually losing money. It's just
Thinkorswim isn't.
no, it's not. But
Most
it's
people,
what I know, and it's what
yeah,
I'm.
it that's the thing. Most people that use ICBR and a couple of these other ones, they get much better fill, Lightspeed. They're
Yeah,
better fills, quality fills.
at some
well,
point I want to switch, but it's like right now I'm learning how to use my own indicator because it's like everyone's always so surprised when I tell them that, hey, I don't know the best way to use the indicator. I'm getting better at it. But everyone thinks because I wrote the indicator, I should be the master on how to use it. But it's like there's other people that probably use it better than I do, and so I'm spending the time getting to know the flow and how it works, and that's why I listen to Ripster. So I'm learning with you guys, and so don't take me as the expert. Yes, I've used the indicator longer than you have, but don't think of me as the expert.
yeah, the thing with Ripsters call in the morning is that it's really difficult with all the background noise.
Yeah, he's got all these alerts going off.
Hello.
I was just saying my
Oh, I can't. I'm not even on the computer because my power is out.
Oh, okay.
I can't even get onto the screen.
Yeah, it had your voice was off.
Oh, sorry. I'm like trying to get back on the computer because everything's off, and I haven't been able to do it. It's so annoying.
Okay,
Sorry about that. Okay.
I know from
Oh, we're getting a nice breakdown here. But, yeah. So what I can try is for Ripster maybe tomorrow morning. The the challenge with Discord is that you can only be connected in one place at a time. But I can I'm gonna set it up tomorrow so that it will grab the audio from Ripster directly from the application, because right now I have an open mic that goes
Right.
to a laptop, so the quality is not going to be as good. So I will set it up tomorrow morning so that the quality is much better for what Ripster says.
I think his keyboard strokes and all the other background noise is way louder than the actual commentary. I don't know if it's just me, but it's difficult to hear him what he's explaining.
Yes.
But I get bits and pieces here and there, though.
No, I agree. And you know, it drowns out the mic. I'll send him a message and ask him if he can get. Yeah, I mean, he needs to just get a separate mic because he's obviously using the mic built into the laptop, and so when
Right.
he hits the keyboards, it's
Yeah.
picking it up directly. But yeah, so I'll try and improve that. But I mean, so really, the key is that knowing when not to trade, because I think if I look at all of the beginner mistakes I've made, most of it was taking the wrong trades and losing money on it, where if I simply looked at the EMA clouds and knowing that I'm below the EMA clouds and it's a low probability play and not to take it, you know, I would have saved so much money. So I think that's like the first thing I want you guys to learn is know when not to trade, know when it's a low probability trade, and then play small, play with a stop loss. And then, you know, Ripster is very good at, you know, the opening trade, but I don't think you should be taking trades until 10 a.m. unless you really understand the system and you're really fast at trading.
That's right.
Because I mean,
So
you shouldn't focus on the money you can make. You should focus on the money you could lose, and you should really, it's all about becoming consistent, learning the system, and you know, so if you trade small and just really learn the system and how it works, then the money will come. I promise.
right, right.
You wanted to say something?
I wanted to ask you, now that I was looking at SPX and you were talking about when we are below the EMA clouds. So a put position roughly an optimal entry would be maybe when after the big red candle at about 11:38 on a 2-minute time frame.
Okay, okay, I'm sharing my screen. Take a look at my screen. I'm gonna go to SPX.
On a 2-minute time frame.
Yep, 2-minute time frame.
There's roughly a blue arrow pointing down with a put signal question mark at around 11:44.
Yes.
So roughly that where you would say that we are below the red EMA cloud, and you know is where you would enter.
Yeah, so if you look at this, so do you see my mouse moving?
Oh, sorry, I was not looking at your screen. I was looking at my screen. Yes, I see your mouse.
Okay, so this is the red EMA cloud. Okay.
Okay.
So you can see, so here on the left, that same cloud. So this is the 513. So that means that the top of it uses the 5 EMA. And the bottom is using the 13 EMA, and all of it is on the 10-minute, because if you look at the Ripster EMA clouds, it's based on the 10-minute chart. Now, even though you look at the 2-minute chart, I draw the 10-minute clouds because that's really the important clouds to look at. So when you're here, you can see they're green because the 5 is above the 13. Over here, they're red because the 5 is below the 13. That's what it means. Okay.
Okay. I see. Okay.
And so if you look at this, and then when they flip, I change the color. So when they're stacked, it's green. Otherwise, it's red.
Right.
So like you say, right here, we're below that EMA cloud.
Right.
That cloud if you look at it, moves down, instead of sideways. Like if it moves sideways, then it. Let me just mute Ripster. Um, and so this put signal as well as the blue triangle, they're on this candle, and they are pointing, and they're below the EMA cloud. Okay, so when I say below the EMA cloud, I talk about this guy and this guy. This guy is the 3448. Okay, so this one, the 513 is the more important one. If we're below both of them, then we're even more bearish. And then if we'll talk about, but so we talk about both, but the primary one is this one right here. So we blow it, we get a put signal. Now again, we don't want to buy puts on a red candle. Okay.
Right.
So we're like, okay, great, I'm ready. So the question is, you should always say, okay, if I get a put signal right now, what puts am I going to play? Okay, so if you play SPY or SPX, I usually like to play, like if we're here, I'm going to say, what's the next strike that's just out of the money? So I might go to 45.90, 43.95. If they're too expensive, 43.90. But you don't want to go too far, because then you're almost certain to lose money. If you're in the money, it's better. But the problem with in the money is, okay, let me put it this way: if you're just out of the money, you'll see as you go in the money, the option price will quickly increase. Okay.
Yeah.
So as you get in the money, it quickly increases. So if you buy it and it's already in the money, then you already paid that premium. So if you then go out of the money, you will lose money very quickly. Now if you're right and you stay in the money, then you'll gain premium very quickly. So if you buy in the money and you're right, you'll make more money more quickly. Okay, but if you're wrong, you're going to lose money more quickly. So at the money or just out of the money is like a nice compromise where you're not overpaying because you're in the money. And so if you go in the money, it will jump quickly. If you're wrong, it's not going to lose value as quickly. So that's why I prefer just going to the next strike that's just out of the money. But there's, because I think that's a nice compromise.
Right.
Who's on the mic right now? That's right.
Sorry, what's your name? Money for Life?
My name is Chavi.
Chavi?
Yeah.
Okay. It's Chavi.
Nice.
Yeah, and she is married to
Naveen.
Naveen. Okay. I'm going to try and remember that. And so he's one of the traders on here as well. He's not on here right now. He's Humble Trader, I think.
Yes.
Nice.
Okay.
Are you guys up in Canada? You guys in the Ontario, Toronto?
Ontario.
Nice. I come up there quite a bit.
Oh yeah.
Oh yeah, I have family all through Ontario, all through Toronto as well, Brampton, everywhere.
Nice. We're in Brampton.
Oh man, you know what? I don't know the exact location, but we go to Brampton, we go to Mississauga.
Wow. Okay. Well, let me know what next time you're coming up. So where about do you live now? Like in the US?
I'm in the US. I'm in DC, not too far from Frick. Like, how far are you from me?
From DC, man, probably a good 7 hours drive. If you're in DC?
Yeah.
Okay, about 7 hours. Yeah, I'm in Northeast Tennessee. Pretty much in the corner of Tennessee, northeast corner. Almost in Virginia.
Nice.
Almost.
Yeah, so Shavi, to get back to your question, so okay, so now that you understand Sorry, what's that, Vic?
I'm sorry, I was answering. Oh, nothing.
Okay. So you understand the strike now that I like to play,
Right.
and why. And then so you understand this is the important EMA cloud, and it changes color. So when the 5 is below and the
Right.
13 is on top, it's red.
Mm-hmm.
This is the 3448 EMA cloud. It's blue when the 34 is on top because that's bullish for this guy, but it's a slower EMA cloud. If it's opposite, then it's orange. So when the 48 is on top, then it will be a different color. And you'll see I have the bottom line of this EMA cloud has got a little bit of a line on it. And that is just, that line is always the 48 EMA. So if it's inverted, it will be at the top. Otherwise, it's at the bottom. So it's just a reminder for people that don't know the strategy yet as to where the 48 is. And now Ripster, he uses the 3450. So he doesn't use the 48, he uses the 50. It's very close. I like the 48 better, and Saudi likes 48 better as well. So when it says 3450, it's pretty much the same thing. Okay. So now we got. So your question was, so you got this put signal right here in SPX, blue triangle. So the blue triangle is like a little magic sauce where I determine like what the short-term trend is, so that's just based on math, and it's like, okay, it looks like we're going down, and then we have a put signal which is based on multiple 3 and 7 EMA clouds, so it's very, very short. And then basically, so these two things are using completely different logic, okay? And that's why they don't happen at the same time. So you can think of these as, they agree or disagree. But so when you get them both at the same time, obviously that's a strong signal.
It gives you a bit more confluence.
Exactly. So now you can see, so you have a red candle, but you don't want to buy in a red candle, okay? So you want to wait for a pullback, okay? So then the question is always how much of a pullback, because sometimes you get a pullback and it keeps pulling back, and then the trade is over, and it's like, okay, obviously if it pulls back too far beyond this put signal, then you got to start questioning it. Okay, now if we have green EMA clouds like we have here, and we have a put signal, then obviously it's a lower probability trade because we're above the EMA clouds. But here you can see, even though we're breaking below it. So this is like, okay, it's low probability because it's puts. We have a green EMA cloud, so we get it. So it pulls back. You get in, but it's a low probability. So no indicator is going to be 100% right. So you have to understand when to trust it and when not to. You have to understand when it's a plus setup and when not to. Okay. So then you get puts here, but now you're below the EMA cloud. It's still green, but you're below it, so it's a little bit better. But you can also see here, this white line here is the open range low, and when you're below the open range low, that is basically another point for puts. So now this is looking better for puts because we're below the open range low. So you can play it. Now obviously this bottom band, so it's blue and it turns red. Red means that it is super trend, bearish super trend. So that's going to add to it. So that gives you more confirmation. But you have to remember, we're at 1028. So So that first hour can be, very choppy. But I always
Right.
say a good time to get into puts or calls are the rejection of the VWAP, okay? Or if we run through it. But basically, when we cross the VWAP, and that's why I mark it with X's. So those are always good places to get in if the trend can align. So you can see we have a lower high here, lower high. So if we look at a trend, we have the EMA clouds that help us with that, but they're a little slow. So if you look at lower highs and lower lows, that's a
Right.
quick way of knowing that the trend is down. Okay. So when you have a higher high and a higher low, that's a quick way of knowing that
They're an uptrend.
we're in an uptrend. Now, when the indicator, when we draw these lower highs and um, they are delayed, so you're not going to see them immediately because we have to wait to see if it's really, a high. But you, as a person, can more quickly look at that even before the LH is there, and you're like, okay, that's a lower high, so I know that we may be in a downtrend. Okay, so that's where humans come, and humans are so much faster than and better than any computer.
That's right.
So here, again, so now this cloud is red. So when you have the indicator, when you see a P for put or C for call, when you have a question mark, it tells you that you're going against the color of the EMA cloud. Okay. So, so even though you're below the EMA cloud, it says, hey, the EMA cloud is green, and you're playing puts, or it's. So this one, it says, hey, the EMA cloud is red, and it's a call signal. So just be careful, because again, it's probably a lower probability setup. And then the X is just saying it's a little bit choppy. And actually, this one doesn't look that choppy to me, but so many times, like here, you can see it's very choppy there, a lot of sideways action. So it's just trying to tell you a little bit more of what it sees. And
So,
go ahead.
sorry, I was just looking at the images. So the X would be a little bit choppy, and then this, the rocket, we're going to the moon.
So the rocket, that is telling me that we just actually this
Had
is
a big drop.
actually this indicator is outdated. Let me just fix that. I'm pretty sure that that's wrong. I changed it. Let me just see. The rocket shouldn't be there because that's old. That's an old indicator on this specific chart.
All right.
Let's see. Okay, that's better. You see, the rocket isn't there anymore, but it's here.
Yeah.
Okay, so because that version was outdated. What the rocket means is that we just very recently touched the VWAP, and now we have a signal. Because remember, I told you the VWAP is so amazing. So I put the rocket there. If we just within the last, I think 4 or 5 bars touch the VWAP, and we get a signal, I put the rocket there just as a reminder that
It was a rejection from.
That's right.
So shall we take a look for a second? You see around up. See how it came down and hit the ORL at 10 a.m. Sorry, go to 10 a.m.
10 a.m.
A little bit of right. And you see how you just tap the ORL IBL there.
Yep.
The bottom wick.
Yep.
And then you see how you retraced up. So you retraced up and you hit the X. You hit what is that?
Right here. This is the VWAP.
You hit the VWAP, right? And then you're coming down again. Then right where before you hit before, you broke that level. Break it right around 10. 26 and 27, whatever.
Yep.
You broke the level before the retest. That's a retest confirmation for going down.
Yep.
So you tested it, it went up, came back and tested it again, and then it went down and broke and continued to break down further as it went down. So that's a good one to consider.
I see.
You're testing it. You tested it once, but again, testing again. Now you have a break, and a lot of people will wait directly for the break right there to jump in. Now you're breaking a level that previously.
Yeah, so
Right.
so I'm just gonna use my mouse to show what it means. So, and actually, let's see if we could paint. I'm not such a good painter, but basically, so we're going down, and then we go up. So we break this level. We go up to retest it on that green candle. We reject, and then we go down. So that's the retest. So we break through this level, this open range low. We go up, test it on that green candle. We reject and we go down. So that's the retest that gives you more confirmation that this is now a good trade.
Right.
And the other thing to consider is the indicator is telling you that it's time to head down. So you're getting multiple tests of confirmation, knowing that hey, this is a good chance. Of course, nothing is 100%, especially in this world, but it's a pretty good test. You're going to at least get a decent move
Right.
from that.
So yeah, so I mean, and that's where you have to understand what to look for and be quick, and
Right.
you can, and that's why we have that's why you have to practice it.
Right.
Because this only comes with time. We could tell you this 100 times, but until you practice it, it's not gonna become part of your subconscious, and that's what you want.
Right.
You'll get to the point where you're looking for all these things. And every single thing, you'll see the super trend, you'll see it break, hit the VWAP, you'll see it reject the VWAP, you'll see it come down. You'll say,
Right.
okay, I'm testing that next level that I was just testing. It retested, now it's breaking, it's going down. Okay, it's a high quality trade. The indicator is telling me it's going puts. I
Right.
have the trend change telling me it's going down. All these things, the more you look at it, the more you study it, the more and more it's going to become second nature to you.
That's right. So I think to begin with, the first thing is to look for the EMA clouds, whether they're green or red, are they above or below. And then sort of look at the overall trend, and then look at the other signals in terms of, are we rejecting the VWAP, are we filling the gaps and whatnot. I think I just have to remember some of these, the lines, the opening range. I didn't know that was the opening range, the white line that you pointed out.
Yeah, so we have one at the bottom and one at the top.
One at the bottom, yeah.
So what were you saying about the ranges, Rick? If you're below the opening range low, it's a really good chance that you're going to continue lower. If you're above the opening range high, it's a pretty good chance you're going to continue above. If you're in the middle of those two, consider chop.
That's right. So chop in the middle, bullish above, bearish below.
Bearish below.
And what is this? I think it's a violet or pink color line. It's IBH.
So it's IB low and IB high.
Oh, IBL. Okay. What is the?
Sure. So you know what the open range is. So the open range says for the first 30 minutes, what's the high and the low. The IB, the initial balance, is exactly the same thing, but for the first hour. Okay. And so you can see that the white line starts at 10 a.m. because that's 30 minutes into it. You'll see the pink line starts 1 hour into the day. But otherwise, it's exactly the same thing. And you treat them the same way. And many times they're going to be very close together, but sometimes they're far apart. But you treat them the same. So chop in between, bullish above, bearish below. So a lot of people use one or the other. I think it's good to use both. So again, if you're below both of them, then it's so much better than just being below one of them.
Like now that you know what to look, go to the strategy section and just go intro all the way down each one of those, and just do that like 10 times. keep going through every single one of the strategy section over and over and over again until you start to see what they're seeing.
So what he's saying, so if you go to the Discord, okay, so you
Oh, in the strategies. Okay, I see.
Yep. So if you go down, you'll see, what mean reversion looks like. So I have screenshots there. I explain that. 10 a.m. trade, what that looks like. Multi-day VWAP, what that is, why it's good, how to use it. Open range. So this is the one we talked about.
Uh-huh.
Open range golden zone. So that's where we talk about the Fibonacci levels. ATR levels. So these are based on Sadie's ATR levels, but we do it slightly different, and I think it works better. But basically, so the idea with the ATR levels are, if you look at, so the ATR is the average true range, so it looks at how much a specific stock or ticker moves in a day, okay? And we look at it over, a couple of weeks, and we say, what's the average movement we expect or we see from that stock, okay? So then, basically, we use Fibonacci levels, and so the 23, if we're above that, then we're it's like a cold trigger, so we're bullish above it. If we're a half ATR or a full ATR, those are all different levels where so if you get to 1 ATR, which is your expected average move for that stock, then you're usually running out of steam. So this will help you if you're going to pick price targets, strike targets for options, because you'll know what the likely range would be. So if you read through these things, it will help you really understand the different ways to play, and and again, all these things fit together, but don't try and do too many of them at the same time. I mean, start simple, use the EMA clouds, understand how they work, and get really good at one thing and then move on from there.
Right. I'm gonna go through them all.
Yeah, it's good to go through them all once, just so that you have
Yeah.
a general idea, and then you
Yeah.
pick the ones that you like better, and then try and specialize on them. But basically, I mean, our main focus is the EMA clouds, and that's that's what Ripster talks about. Basically, if we're above all of the EMA clouds, we're bullish. If we're below them, we're bearish. Okay, and so if you're above and you play puts, it's a low probability trade. Okay, so just know that, and it doesn't mean you shouldn't. It doesn't, but it just means that it's likely not to work. And then he talks about when you change your bias. But again, you could just find a stock that has a proper bias with volume. So basically, if you look at Ripster, he says, I'm starting off with volume. If there's no volume, I'm not interested. Okay, so that's your number one thing. So if you go and look up here in the indicator, I tried to take all of these good ideas and put it in one place. And I know it makes it a little bit, more busy than what many people like. But really, this one indicator is everything, you need. And sure, could you use other things? Absolutely. But pick a tool and learn it. But this is saying that for this ticker, we're looking at SPX, the current volume is basically 1 billion. Okay. And if we then look at the daily average volume, we're at 57% of that volume. So is that high or low? It's hard to tell. So what I usually do is I open up what's it? So I usually, and I open this up on a bigger screen, so it's much easier to see. But so I have my stocks that I look at, my mega caps. And so I have your Tesla, Apple, Amazon, Google, Microsoft, Nvidia, AMD, and Meta. And then I have another screen for everything else. But so I open this up. And so with the background colors, I can immediately tell you which ones are bearish and which ones are bullish. I can look at the volume and I can see Tesla is at 80% of daily volume. These guys at 58. So most of them are at 50s. So 50% volume right now is about average when I look at this. So 43 is low, 75 is high. So Microsoft is low volume when I look at this. Okay. So that's how I look at it and say, okay, is this high volume, low volume? And if you have low volume, it doesn't mean that you couldn't make money of it. It just means that there's fewer people playing it. And for a good movement, usually more volume is a sign that something more is going to happen. So it just if there's low volume, and obviously if there's extreme low volume, then stay away. But so Ripster starts there. What's the volume? He looks at the pre-market volume as well, because that tells him if there's any interest. Then he's going to look at the next thing is he's going to look at pre-market. So let's go to SPY, because on SPX we don't have pre-market volume. So if I look at SPY, so you can see this area is pre-market. So this is where the market opens. So you can see here, so this is my call trigger, this green line right here. This is my put trigger. So you can see, and this is my previous close. So this line here is that what it says? Yeah, so it says previous close. And so you can see based on that pre-market we gapped up, we're above the call trigger. So now we're going to watch this guy for continuation. But for continuation, the first rule is we always have to break and stay above pre-market high. Hello, 1 second, guys.
Lowercase.
Oh, that's good writing.
I did the IBC lowercase.
Wow.
I don't write it. I don't write in lowercase every day.
I know, it's looking pretty good.
I'm doing lowercase letters to learn how to do cursive.
Oh, wow. A lot of people cannot even do cursive. Good job, Baba. I'm just in a meeting. I love you. Good job.
I need a cursive book.
They teach you? Okay, we'll definitely get you one.
They have a black line.
I know. Maybe we'll get you a fancy pen as well. Sorry about that, guys. So he starts off with the pre-market. There's high volume. We have a gap up. But for us to continue to be bullish, we need to stay not only above the EMA clouds, but we have to be above pre-market high. Okay. So when you open and look at this, you're open and you're below the EMA clouds right away. Oh, delicious. Okay, thank you. So when the market opens, always ignore the first candle, because that's the amateur candle. That's the candle that will get you in trouble. Okay, so wait at least a couple of minutes. So you get in, the market opens today. What happens? Put signal, blue triangle, not above the pre-market high. Okay, below the VWAP. Okay, I mean, how many clues do you need to play the downside? Okay.
Yeah.
So you can see with this indicator how simple it is to really know. Now that's why, so you want to focus. you want to have a short list, and that's why we get on at 9 a.m. because Ripster goes through the things with news, and like we thought SPY was going to be bullish, okay, but when you prepare, you get ready. Okay, if we're bullish, what's my strike? If we're bearish, what's my strike? Okay, so you want to be ready both ways. You do not want to trade what you expect. You do not want to predict. You want to trade what you see. So you want to be reactive. Okay. So we open up, see the X below the VWAP, put signal, blue triangle, red lower band, super trend, bearish super trend. Boom, inputs. I mean, when it moves this fast, sometimes it's hard to even wait for a decent pullback candle. But you definitely want to play small, and then when you go into 10 a.m. or get closer to 10 a.m., you want to take partial profits because it could turn. But look at this, beautiful. Now we're below the 48 EMA, so now we're super bearish. Then here, so we get into 10 a.m. and guess what? So here, this is the pre-market low. So we tap the pre-market low. We reject off it. So now the first question is, are we going to change trend? Are we gonna, pivot to the upside? Now, we already knew to take profits into 10 a.m. So, and the other thing is when you approach an important level, you want to take profits before you get to it. Look, this is the previous day high right here, okay? Look what happened at the previous day high. We come down, boom, we fall like a rock. Boom, we get there, we bounce. But, if you know what to expect, you're going to take partial profits before you get there, okay? So it bounces. Look, beautiful rejection of the 48 EMA. We keep going down. We get to this important level, we bounce. I mean, look how predictable it is once you learn how to read it. It gets to this level, it bounces, okay? It goes up. So, I mean, at this point, at 10 a.m., you want to take partial profits, you see this, you could like, okay, I'm out completely because, we might just change direction. Look what happens. We go to the VWAP, we reject. Beautiful. We know how important the VWAP is. We're below the EMA clouds, both of them. We reject the VWAP. Those brown X's, that's the line in the sand. Boom. We go down. Okay. Now, how far down? I mean, again, you get to Prime Day's close, take partial profits. Okay. This white line here, that's the 21 EMA on the hourly. Okay, so another very important level. So you approach it, take partial profits because you could always bounce there. You keep going. Now we're at a half ATR. So we talked about the ATR levels. Take some more profit, and don't chase it. So we get here, and we reject at that level, and we're like, okay, good. So now there's chop. You can see it sideways. You can see all the X's, but until we reject this open range low, once you reject the open range low, boom, that's bearish. You get your put signal. You go, And the thing is, if you get a good entry, then you can hold through these pullbacks because you're still in the money, and take partial profits and then have some runners. So we get here now this blue X. So this blue X here, so you can see, so this is a very important blue X, okay? And so if you look at this lower band here, okay, it's blue and it turns red when we have a super trend, bearish super trend. And then if we get super extended, there's a faint blue line. I'm not sure if you can see that band there. But when you cross it, it's an X. And usually, the first time you hit it, you reject from it. And you can go look on other charts as well. Look, the first time we hit it, boom, rejection. So once you get close to that blue line, profit. Take some profits. Now, if we keep going and we keep staying and we keep getting blue X's, that's a very strong signal that we're starting to form a strong trend down. Because if we can stay in that overextended range and not reject from it, that's a signal that we're going to keep going down usually. Okay. But many times, you'll see the first time you hit it, you reject. So definitely take some profits when you get there. And look at this beautiful rejection. You see this long wick? You see
Right.
we have a little bit of basing there. And that's where actually I said that this is where I took my profit, around this area, because I got into puts somewhere, and then when I got close to that blue line, I took profits right there. So this is where I took profits, because I knew we were approaching that overextended period. It rejected, and I mean I didn't take all of my profits, if I remember. But then when I saw this wick, I just got out of everything, because I didn't trust this. Then I saw this basing where we stay at the same level, and we had that long wick, and then I saw this yellow triangle on Apple, on Nvidia, on Tesla, and everywhere else. And I think Apple had it before SPY, but once I saw that, I got into calls, and I posted that, and I told you guys, okay, I'm getting into calls, and I said it's a low probability because we are below the EMA clouds, okay. But when I see the VIX dropping with a blue triangle, I see yellow triangles in a bunch of important stocks, that's where I said, okay, I'm going to play calls. So I got the 4400 SPX calls, and once we rejected here on this 21 EMA, I got out. So that was a very short, nice scalp. I got 40% on that. I got 70% on this put play over there.
Do you put on DTE SPX?
I mean, zero DT is so dangerous, but I do play it sometimes, and I did play it both times today, because I just, I felt like it was a good setup, but it's very, so I keep it very small when I play zero DTE. I mean, what some people would do is they would do like 1 or 2 zero DTE, but then do more of them on 2 DTE if they want to play bigger. But yeah, so definitely, I mean, you have to know that if you're wrong, you have to cut, because it's going to go to zero. So if you cannot cut it quickly, it will go to zero if you're wrong. So
Right.
it's better not to play it unless you can cut quickly when you're wrong.
Right.
Okay, so but I always play with stop losses. So when I go into that zero DTE, I put in my stop loss, and so if I'm wrong, I just get taken out. And I mean, like on SPX, the contracts are more expensive, so I usually set my stop loss at minus $100. I don't use percentages, I use dollar amounts. So for every contract, it's like when it's $100 down, I'm out. That's all I'm willing to risk.
I see.
So that's how I play it. I mean, everyone does it, differently. But it's very dangerous. So then, again, we get here. Look, we reject the I below.
Right.
We reject the 21 EMA. Down she goes. Super choppy. I mean, so, but I mean, if you look at it and you play the indicator, it makes it so much easier. And then why this bottom right part is so important, because you can see the 2 minute, 3 minute, 5 minute,
Right.
etc. So you can see that on the 2 minute, which is what we're looking at right now. So for us to get bullish, obviously we have to get above the EMA clouds. We have to get above the VWAP. We want to get above the pre-market high. I mean, so every one thing you tick off, you get more and more bullish. So it's like, so you don't get all bullish at once. You get a little bit more bullish each time you tick something off. Now, for us to fix the broken structure, we want the 2 minute to come green, then the 3 minutes, 5 minutes, 10 minutes. And then this is, so on the 2 minute, we have super trend. That means the upper line is green. If you look at the 3 minute, you'll see the same thing. On the 5 minute, the upper line band is not green. On the 30 minute, the upper band is red. So this,
Right.
like, I think it was yesterday, where everything was just, the whole thing was green. And,
Yeah.
then at that point, you're like, okay, man, I know what's happening. And then the other thing is up here, it shows that on the 10-minute chart, we're trending green, which is bullish. And we've been doing that for 20 minutes. And it just went away because we just dropped down. So when you look at all those things, they all give you clues as to, what's happening. Then you have the market internals. So we're bearish on ADD, we're neutral on tick, neutral on vol-D. Well, I mean, I say neutral, but I mean, it's red because so this will tell us generally what the market condition is, but this is relative to where we opened. So if we're now lower than where we opened, then these are red. I mean, so there's a screenshot that explain all these things. So if you go back to Discord, you go back to start here. So this is where you get the documentation and everything else. But down here, I posted the screenshot that tells you, what these things mean, what the levels are, what all these things mean. So, it's right there. And you can see that our call and put triggers are based on Sadie's ATR level idea, but for pre-market, we use the previous day close. That's what it does. But for when the market opens, we use the open price, where you still use the previous day's close. And so that's why our values are different than his during market hours. And I find it works better. So let's see. So yeah, and then on the left, this is saying that so when the market opens, it will tell you if we open in range or higher out of range or lower in range. So all those things. And then based on, so we're below the pre-market low. We're 0.2% down from the previous day's close, but we're down 0.62 down from the open. So the bigger these numbers are, the better plays they are, because they've had big movements already for today. So there's a lot of people playing them in the same direction. So when these percentages are bigger, it makes for a better play as well.